And so the best moving average in order to time the Bitcoin market, in order to get this kind of an outperformance over here, if you want to buy whenever we are above the moving average, sell whenever we are below the moving average, when you want to get the best moving average, you will need to take the... Now in this video, we're going to discuss how we can time the Bitcoin market, because the issue is Bitcoin over the long term goes up, but over the short term, it can go down quite massively, right? In case you don't know, in 2018, Bitcoin went down from its 20K peak all the way down to around 3K. So an 80% drop within 1 year. And so that begs the question, right? Does it make sense to really always just buy and hold? Or does it make sense to somewhat try to time the market, to maybe sometimes sell? And if we do see that the positive momentum might be turning around, maybe it makes sense to be in cash. Maybe it makes sense to somehow stablecoin yield farm, right? There's all kinds of options. So that's what this video is about. We will use the moving average in order to time the market. And in this video, for this video, I've done a backtest. So that means I've done a simulation of like buying and selling Bitcoin according to different moving averages. And what we're going to do is we will not just look at the simple moving average. We're going to focus on the exponential moving average. So a simulation of buying and selling has been done with the exponential moving average for Bitcoin, the daily moving averages. So let's look into this, right? This is kind of like what you've seen in the thumbnail. There's many different kinds of moving averages. And the question is always, what duration should we take? So when we've got such a moving average, when we go to tradingview.com, we can change the duration of that moving average. And depending on how short we make this, the closer we get to the price, the more active we potentially trade, right? Let's say we take the 50-day moving average. We would be outside of the market here in May of 2021 until July of 2021, we would have avoided that kind of a drop. But on the other hand, we would also trade in and out relatively often during these kinds of movements, right? Where you might just buy in, you buy high, you sell low. That's not necessarily what you want. And so the question really is, if we look at this historically speaking, if we look at the exponential moving average historically speaking, what duration is the best? And so what I've done for this video is I've backtested all the moving averages from 1 day, which basically means just looking at yesterday's performance, all the way to the 50-day exponential moving average. And based on that, we can then determine, without looking at trading costs or anything like this, right? We don't look at slippage, we don't look at bid-ask spread, we don't look at gas costs, nothing like this. If we just take the pure signal, the pure price performance, what would have worked historically the best for the exponential moving average for Bitcoin? And the time horizon that we are going to backtest starts over here in August 2017. So we've got a bit of a bull run, a bit of a prior bull run in here. We've got the entire crypto winter. And then, of course, the entire recovery, including all the way to today, where we are currently at approximately 39K US dollar per Bitcoin. Now, this is the result for the best of those backtests. Now, that being said, when you backtest all of those moving averages, all of those exponential moving averages from 1 day to 50 day, all except one moving average outperformed buying and holding. So what you see over here in white is the Bitcoin price. It's just buying and holding. And here in green, we see the exponential moving average trading performance, the best of the backtests. This is a linear scale, right? So we can't really see that much what happened here in the early days. So maybe we want to change this to a logarithmic scale, meaning that now each step here is a 10x instead of just a fixed dollar amount. That way we can really see why that trading strategy worked in the past. And what's important to note over here is that when there's a bullish period, right, when prices go up, we don't necessarily outperform buying and holding. But when there's negative momentum, when the price crashes by here 80%, more than 80%, then our trading strategy can pretty much keep pace. It can pretty much guarantee that we are not losing, right? We're pretty much going sideways with this portfolio line over here. And the same is true here for the Corona crash, where we fell down in Bitcoin in the single day by more than 40%, right? This is completely taken away by a trading according to that exponential moving average. Now, it doesn't always work, right? So see at this decline over here, the summer depression of last year, we pretty much followed that depression. But the second dip over here, we got pretty much spared. And so let's now look at all the different kinds of results for the exponential moving average. That's this chart over here. So on the x-axis, we see the duration of the exponential moving average, ranging from 1 day all the way to 52 days, actually. I haven't just tested up to 50, I've tested to 52. And then here on the y-axis, we see the annualized performance if you trade it according to that exponential moving average. So again, the idea is when the price is below the exponential moving average, we are completely in cash. And so when we look at this chart over here, right, we've got periods where we are simply going just sideways, where we are completely in cash. And the avoidance of a lot of this bearish momentum is in the end what leads to this outperformance. In black, we see the buy and hold line. So over this time period, we would have gotten an annualized performance by holding Bitcoin of approximately 60%, a bit over 60%. Trading according to those exponential moving averages pretty much outperformed buying and holding. That stopped, however, once we go to 52 days. I haven't tested anything beyond that. And so what's the best exponential moving average using that strategy? It's this point over here. It gives us annualized 115% instead of just 60%. It's the 14-day exponential moving average. That's what you're looking at. You need to buy Bitcoin whenever the price is above the 14-day exponential moving average, sell Bitcoin whenever we are below. Now, before we go into the practical implications of all of this, if you so far find this useful, please give this a thumbs up. And of course, consider subscribing because I publish videos every single day. Now, here's the exponential moving average with duration 14, right? 14 days. That's the line here in red. And we can see this is by no means a perfect strategy, right? Sometimes we are not very ideal with getting in and out of the market. By the way, this test, the simulation has just been done by looking at the end of day prices. So we're not going to trade in and out of Bitcoin within the day. We're simply just looking at the end of day and then decide, are we going to hold Bitcoin for another day or are we going to sell? So that's all we do. And that's the price. And so sometimes the volatility, it does create bad signals, right? So for example, over here, we would have sold Bitcoin at this price over here and then just bought it back in for a higher price 1 day later. Then we hold it for a few days just to then again sell it over here for a lower price. So it would have actually made a loss over here of 4% roughly. Then we wait a little bit again for the price to go high. We would buy in over here. We take a bit of positive momentum, but then actually sell here again for a loss. So by no means is this a perfect strategy, but if we compare all the different exponential moving averages, this is at least the best we've got, the 14-day exponential moving average. And so, of course, trading very actively according to this does have a lot of implications. Depending on your jurisdiction, you might have some tax related issues with something like this. It is a very active approach, but I do think just as a general reference point, if we just look at statistics, maybe it makes sense to be at least cautious when the price is below, right? Maybe momentum turns around. If we've already come up, say, within 1 month or so by 50%, and then we see that the price has a hard time staying above that moving average, maybe then momentum does turn around. The thing you always want to watch out for when using this moving average are sidewards trading ranges, right? Like right now, we are pretty much in a sidewards trading range, and so we always get these bad signals. So by no means is it certain just because the price is now below the moving average that we have to definitely go down from here. We could simply just get a few more of these bad signals. But if we now just crash and stay below the moving average, maybe it's not that positive. If we maybe break above 44.6K or so, and we are outside of this sideways trading range and at the same time above the 14-day EMA, then maybe general momentum can turn around again. Now, if you're interested in building such a backtest yourself, or if you want to do another backtest, maybe with another asset, not with Bitcoin, then the premium membership might be for you. Over here, we've got quite a few different tutorials, how to build these different backtests using Microsoft Excel. You can also download directly those Excel sheets here from the website. So there's trading according to the relative strength index, there's moving averages analyses. And in here is the video how to build the Excel sheet. In here is the link to that file itself. And of course, there's all kinds of other exclusive content. I do, for example, daily market updates on how I currently see the overall market. So that's Bitcoin, that's Ethereum, that's also various altcoins. If you haven't yet joined our Telegram channel, you might want to check that out. Simply search for Bitcoin Strategy channel within the Telegram app. And last but not least, you definitely want to check out this video over here. It describes the best simple moving average for Bitcoin. So not the exponential moving average, but the best simple moving average. So a lot of value over there. Don't miss that out. See you in that video. Bye-bye.